there has been instances in crypto where entire chains went down and all the projects that built on it essentially went down as well. So we diversify what's called multi-chain, which is in a bunch of different ecosystems. So Solana is one, Ethereum is one, there's Cosmos, there's a bunch of different ones.
Is Haktua one of those?
Haktua is not one of
Okay.
those, and that is not one that we bought.
Is crypto the way of the future when it comes to real estate? Well, we have Mike Klein and my good friend Matt Holm, and we're going to discuss crypto in general and crypto in real estate. Should you be using it to buy? What are the ways you should be using to buy? Can you buy with crypto? Stay tuned.
Hey, I'm Mike Klein with Digital Wealth Insider. We get accredited investors in all of the most promising, exciting sectors of the crypto markets without any of the work and hassle and all of the unnecessary risk eliminated.
Well, Mike, I mean, I want to start from the basic. I mean, some of our audience may know a ton about crypto, some may not know much at all. Can you just define what does crypto mean to you? I mean, obviously you're an expert, but can you break it down and explain, like in your mind, what is crypto?
Yeah, crypto is really, it's the next version of the internet, and there's a bunch of startups building on this next version of the internet. So just like, there was Web 1 with all of these old school companies like Amazon, and then we moved into Web 2 where there was the Facebooks that kind of emerged and the Instagrams. Now we have Web 3. And so really all these different tokens and these projects, when you log into Coinbase or something like that, these are a bunch of startups. Some of them are platforms that startups build on, and some of them are startups themselves that are solving problems.
So when I think about crypto, right, I think of this thing that I don't even understand. And so, for someone that's looking at buying or selling real estate and you think about crypto, for the average person that's buying or selling real estate and crypto is involved, like what should they be looking out for?
Yeah, I mean, so there's a few ways to think about it. It's really a monetary exchange, right? So there are people that have made a lot of money in crypto or that hold crypto, and maybe they want to utilize that to buy a house. Or maybe they want to use that crypto to get a loan. They don't want to sell the crypto and they want to collateralize their loan using their existing cryptocurrencies.
Is it kind of like with stocks where I know people that sometimes they'll take a margin account and actually buy real estate with that, or they'll find a way to get better rates based on their portfolio size. Is that a tool that you can use in the crypto space? Are there similarities? Because I've seen people in the financial sector use tools that are really unique. Is it a similar kind of like language you can speak with crypto?
Yeah, so I mean, it's an evolving system. There are platforms that allow you to deposit your crypto and take a loan against that. Now, what's different in crypto is because there's no background checks, there's no credit checks, there's no income verification, you have to over collateralize the loans, which is sort of a newer concept to people, right? So if you think about it, if you want to take maybe a $500,000 loan out against your Bitcoin, you may have to deposit $1 million in Bitcoin. But you get to avoid the tax implications of selling that Bitcoin at the time, right? So you get to avoid the capital gains tax. And then you have to make sure that you maintain that ratio. So because Bitcoin and other cryptocurrencies move up and down in value, you have to make sure, just like a margin call on Wall Street, that you don't get lowered. Like as the price goes down, you're basically get a margin call.
So do you see most people actually selling the asset itself, or do you see people actually being comfortable with essentially margin account usage on that? And are they usually comfortable with double, or do they get comfortable with a 6x? I mean, obviously crypto could go from 100,000 to 30. I don't think it will, but it could, right? So all of a sudden you should have 3 or 4 or 6x. Like, what are the applications and what's the common use that you're seeing when people take out that money to be able to purchase hard assets?
So the most common thing you see is that people are just buying the asset with the underlying cryptocurrency, right? So there's been some really large transactions in Dubai, in Miami, where people have bought, properties of values of $10 to $40 million using cryptocurrencies. And then effectively they'll work out the tax implications on the back end. There are new platforms that are emerging that allow people to circumvent that. But of course, in crypto, it's sort of, crypto is sort of this wild, wild west where everybody's sort of responsible for the benefits and the consequences. And so if you do use a platform and you're not used to things like margin call, or, in the middle of the night, like you mentioned, Matt, crypto, goes down 10%. then if you're not on it, things can happen, and they happen kind of automatically because crypto uses the system of smart contracts, which if this happens, then that happens. So not like a bank where maybe you have a loan and they call you and they say, we're going to give you a grace period. In crypto, things can happen automatically. And so it's one of those areas that it's really amazing if you know how to utilize it. But if you're not really sure what you're doing, you can get into a lot of trouble.
So let's bring it back to real estate. All right. So I'm a seller and I have a $3.13 million home in Travis Heights. That's where we're shooting right now. It's Matt's listing. So I have this home. I want to sell it. And somebody comes to me with an offer with crypto.
Yep.
If I'm a seller, should I just be like, F that? I'm not doing that. That's crazy. I don't even know, understand it. Like, what should I be looking for as a seller?
So I think you want those buyers, right? And there are people that are going to say, I'm only looking to pay in crypto. So there's platforms that you can utilize that will, just like when you swipe your credit card and things happen on the back end, that person will pay in crypto, but it'll convert it over to fiat or dollars, and then no one will be the wiser. And then there's also the facilitation of, hey, like me as a seller, I'm okay owning that crypto. So I will take that crypto from you. Now, of course, in a month, the price of that crypto you received could be lower, but it also could be higher. And so it really is, do you want to own that asset long term? So you have a few options. You can take the crypto, you could sell it, you can use a platform that automatically sells it, or you can take it and hold it for yourself.
I think the fear most buyers would have is like you hear, or sellers really would be, you hear rug pull, right? Why I jokingly said Hawk Tua. That's one I know of because it was a meme coin. If I got paid in Hawk Tua coin, right, and then the day later it went down to whatever it went down to, my $3.1 million home, it's now $1.5 million that I got for it, right? So how do you I mean, how do you really mitigate against that? Or do you just say, okay, I'm taking Bitcoin? Like, I guess I'm really asking the same question. It's just probably because I don't really understand the mechanics of how.
Yeah, so it's either you're going to use a platform that's going to facilitate on the back end the conversion. So then you don't really care. You're agnostic, and there may be fees associated with that, but usually the person with the crypto is going to pay those
Yeah.
fees, right? So then it doesn't really matter to
So the
you because
safest is just change it to fiat, i.e. US currency,
right,
and then you have that equivalent and you're done and done. So it
right.
really acts as if it doesn't really matter then, I guess, unless you're taking it in the actual coin itself.
It doesn't really matter unless you are saying I want to actually take custody of that coin, and then my advice would be it should only be one that you want to own long term, and you've thought about how this fits into your own net worth and what percentage you want to own as crypto. So in that way, it's just a different way to acquire crypto versus you paying dollars. You're basically using your property.
So is it just wealthy people that are paying in crypto, or is it like who's paying in crypto to buy a house right
I think it's usually right now. I think it's wealthy people, and once again, this is on the retail side. The commercial side of real estate, I think, also is actually probably getting faster traction when it comes to the intersection of real estate and crypto. So BlackRock, a lot of the larger banks like J.P. Morgan have been tokenizing property on chain, and what the advantages of that is that you're basically taking a property, and usually you're putting in like an LLC or some sort of entity. You're issuing tokens that represent the value of that, and now hypothetically those tokens can be instantly traded. You have global equity or global liquidity, I should say, that now is applicable to that token, and you can buy it and sell it in a free market. And then you also have a much more larger base of customer for that asset, where like now I can own maybe, Matt, this is a 3.2 million dollar home. Maybe I just want to own $1,000 of this home. And of course, from a retail perspective, that doesn't really make a lot of sense. But if it was a rental property and it had income associated with it, I could own a small percentage of it and get a small percentage of the income as well.
How does that work?
Yeah,
So
how does that work? You just lost it
you
big
just
time.
blew my mind, but like, is that a syndication deal almost? That in my language would be group of investors come together, own an asset, you own a percentage of it, you have a estimated time of return 5 years down the road, or maybe some yearly payoff or quarterly payoffs. Like I've never heard of that structure of owning partial ownership in a fractional piece of actual hard assets
Yeah.
that then gets repaid as a into your coin as a percentage return, or how does it actually function?
Yeah, so it's kind of, I mean, there's a lot of different ways you can do it, right? It's kind of like a REIT, right? But you're using tokens instead of shares, and you're getting access by using tokens to these global 24/7 crypto markets and exchanges, essentially. So there's a few ways that entities are going about this. One is the structure that I mentioned, where you put the property essentially as a legal entity, you issue security tokens. So that's important to say. You're basically having a security, and you have to comply with security laws. And then people can buy a token. They can buy half of a token or a small percentage of a token. And then usually there's rights associated with those tokens, so you have to understand and read the paperwork. But let's just say, for instance, this property becomes a rental property. It's generating $10,000 a month in income. If I can own 1% of that income. You can also put it in an entity called a DAO, which is like a community owns that property, and you can vote on decisions, whether we raise the price, whether we lower the price, different things like that. So these are the things that the biggest entities in the world, like I mentioned, BlackRock, Citi, JP Morgan, they've been experimenting with for years, and they're starting to see a massive growth in this sector called real world asset tokenization, which is taking these assets that live in the real world and tokenizing them and putting them on chain.
So you bring up an interesting topic, and to me, that speaks to a potential growth in the industry. So you're seeing adoption by these huge companies,
Yeah.
specific to real estate. Right now, it appears that we're in a political climate right now that is endorsing crypto.
Yeah.
I'm assuming that's going to potentially give us a bull market based on U.S. government adoption. And what do you know about what they're doing? And does this strengthen the case for crypto? Is it? I mean, what does that mean? I guess.
It's really exciting. So, I've been in crypto since 2016, and all assets fundamentally, their value is intrinsically based on risk and reward and the combination of these two things. And so the risk in crypto has always been, since its inception, is that a government, or, really the US government, or some of the most powerful governments, would come along and outlaw it. And that has always been baked into the price to some degree, right? There's always been this fear. And that was really prevalent up until Trump took office. And I would argue to most people that that risk is the lowest it's ever been. And because that risk is low, what you're seeing is there's a lot of institutions, you think everything from endowments to big institutions like BlackRock and JP Morgan, that have hesitated to really embrace crypto because they've been concerned of this regulatory oversight, right? So maybe they start embracing this technology, and then the government or the SEC or somebody comes in and says, hey, you can't do that. And now they have egg on their face. They've invested a lot into the infrastructure. And so I would argue, through Trump's already efforts and his administration, that they've pretty much given the green light to institutions that you can hold crypto, you can offer it to your clients, and they've kind of paved the way to say, go embrace this technology. So risk is probably the lowest it's ever been. I would argue adoption and potential adoption at a massive scale is the highest it's ever been. And so, ironically, crypto markets are a little bit down right now based on this global fear of a recession and different things like that. But barring that noise, I would argue that this is an amazing time to be in crypto because of that risk reward profile.
That's pretty interesting that you said that. Like, so let's say this house right here, let's say this $3 million house, if I'm renting this house out, I'm getting a $24,000 a month income on it. I could break this into coins, right?
Yep.
And so I could sell off those coins. So each person has access to a little bit of the income from this property, right? I'm doing an interview with somebody talking about PE firms and how PE firms work, private equity firms, and how they're destroying the industry as a whole by what some of them are doing. My question is, can somebody do a hostile takeover and buy up all those coins and then just take that house in themselves?
Yeah, I mean, I think so. I mean, I'm not an expert on hostile takeovers in real estate, but what you are doing is you are fractionalizing the ownership of it. But it's no different than if you were issuing shares, right? Except tokens are, I would argue, more powerful than shares in a lot of different ways. But yes, somebody could buy up, and depending on the rights that were associated with those tokens. So, just like any company that issues stocks, there are shareholder rights, and those are flexible, right? Those could be decided for that specific offering. But if you were to say, we're going to issue tokens, and everybody gets a vote, one vote per token, and majority rules. So whatever the majority of token holders vote is what ends up happening with the direction of the property. Then whoever buys the majority of those tokens would have the most voting rights, and they would be able to make decisions.
So from a buying standpoint, if I'm a buyer and I am a crypto king, I'm naming him Mike the Crypto King. If they're a crypto king, right, and they want to buy a house with crypto, what's the advantage to selling off their crypto in order to buy a house?
The advantage would be you're diversifying, right? So you're saying maybe I made a lot of money in crypto, 90% of my net worth is in crypto, and I now want to diversify into real estate, and so I'm going to swap some of my crypto for real estate. And there's platforms that are going to make that easier than me going on an exchange like Coinbase and selling it and having fees and then moving it over to my bank and different things like that. But effectively, that's what you would be doing.
So you just write an offer for a property. So I'm a buyer. I want to buy Matt's $3.13 million house in Travis Heights, and I want to write him an offer.
Yep.
So I'm gonna send him what 10 Bitcoin for this house. I don't even know how much a Bitcoin. How much is a Bitcoin? 30.
90,
It's
what?
about $88,000
Okay.
as today.
So whatever that is in Bitcoin, right? So I'm gonna write an offer for 50 Bitcoin, whatever that is, right?
Sure.
Uh, is this that's how you're gonna do it, or how are you
You,
gonna?
you could do it that way. You could also deposit that Bitcoin, say 50 Bitcoin, and take a loan for 25 Bitcoin. And the advantage of that is I'm not actually selling my Bitcoin, right? So I'm not incurring a capital gains tax on the sale. I believe maybe that Bitcoin is going to be worth a lot more in a few years than it is today. So I get to continue riding that bet, right? So maybe Bitcoin is $88,000 today. I think it's going to be worth $200,000 in a year or two. The last thing I want to do is sell it for a property because I missed out on a huge opportunity cost. So instead, I'm going to deposit it into a lending platform. I'm going to borrow a percentage of that. It's less than the percent that I borrowed because it's over collateralized. And then I'm just going to pay you with what I borrowed. And then I'm going to go ahead and maintain my loan separately.
Curious, like if I'm the person that owns the Bitcoin and you're doing that kind of leverage and you're borrowing against it, what are those payments? Do they come out of the Bitcoin shares? Do you pay that in fiat back into the interest rate? Like, what are these vehicles? Like, if I'm the owner of those Bitcoin, what does that look like? What's the typical interest rate? Is it better than par interest rate on a conventional mortgage? Like, what are the benefits of that?
So I think it's usually higher actually. So the interest rate is usually higher, and you have to, the interest rate, it depends how the platform works. It could come out of the collateral, and then you just have to maintain your certain ratio, right? So maybe you get a call at, 50-50, but maybe you only borrow 30% of the value of Bitcoin. That's like the safer play when you get down to lending. You either Bitcoin drops and you need to either add more Bitcoin or you need to repay your loan in full, or you can make sort of decisions based on that. But once again, you as a user, you are making these decisions, and these platforms are going to offer different structures for different people.
Who's offering these loans against your Bitcoin? Are there multiple, people that are
That's a good
doing
question.
that? Are there different
Great
rates they
question.
offer? Are
Yeah.
there more riskier ones? Are there less risky? Are they leveraged? Like,
So there's lending pools. So our fund hypothetically can use some of these pools to earn interest for our investors, where we will maybe deposit crypto and say people can borrow this crypto at a set rate. And usually all these rates are dynamic, meaning they fluctuate based on supply and demand. But because of the way that the lending platforms work and smart contracts work, if that loan gets below a certain threshold, the amount is pulled back. This protects lenders because, as I mentioned, these are over collateralized loans, which is sort of a newer concept. Now, there are like some entities in crypto that are working on credit scores and things like that to not do over collateralized loans, because when most people buy a house, they're putting X amount of money down, and it's much less than the value of the house. This is almost the reverse,
Right. You're putting
right?
more than the
You're
value.
putting more than the value of the home. But that protects people that want to participate on the other side. So decentralized finance, or DeFi, is essentially peer-to-peer trading, peer-to-peer lending, and borrowing. So there's people on each side of it, and there's a rate associated, a fair market rate, or a deterministic rate by the market that says this is how we're going to reward each participant, and this is what we're going to charge.
And then on the lending side, I guess you're de-risked because at a certain trigger point, you just get your entire piece back and you liquidate their underlying asset if they drop below 50% and they've repaid their loan in
Yeah,
full. So
exactly.
there's no risk of it coming, the house coming back to you,
So
foreclosure,
so probably
like
risky,
all
but
that
yeah.
stuff. So it's
It's pretty low risk
it's
because it's automatic,
right.
right?
Okay.
So like in
But
tradition,
if okay, like if I had, okay, so I'm borrowing 50%, I put double the amount that the home is into this in order to collateralize and get the money out. If all of that goes to zero, like Haktula rug pools, right?
yeah.
Then that lender still has risk because now there's no money left in that.
Yeah, but well, I don't think there's any lending pools that would accept that currency. But as the price starts to go down, when it reaches a certain threshold, there's automatically going to be a liquidation
So it's not like you have
of
to be
that
awake and
position.
the stock market's opening or something. If it happens
Yeah.
overnight, you can wake up
But
and
you as the borrower is just still paying back the loan. They've just liquidated the assets that you put in there.
Right, they'll liquidate your underlying assets.
Yeah.
Yeah, and
Okay.
so
which means
once
then your
again,
house is basically paid off automatically at that point, right?
Yeah.
Because
But
you're
you're still paying the loan to the lender.
uh,
The
well,
lender's been paid for that
the
property.
underlying asset. If you borrow 50, you have 100, but it gets too close to that 50, they just take the 50 that you borrowed, and that pays off the mortgage. Yeah,
For the
that's a good
lender, but
question.
not for you, right?
yeah.
And
So
Right,
you're still paying for the
you're still
mortgage.
paying on the
so
mortgage.
the
Yeah.
thing in crypto is it's never one way or another. So there's all different kinds of platforms with all different kinds of products with all different kinds of terms, and this is where the complexity comes in, but also the advantage of customization. So there's going to be platforms that do it one way. There's going to be even different products within one platform that allow for different structures. They may have different loan to value ratios based on what asset you use. They may have some may have a grace period for payback. Some of it may happen automatically. It may be binary. It may be linear. There's all different solutions out there.
So if you have people that own crypto and they want to go research that, what are some of the bigger, more trustworthy companies they could go to lend against their Bitcoin? So not just coming from the seller aspect, from the buyer aspect, how do you shop those? I mean, you just put in ChatGPT, who are the good lenders in crypto? Like,
No,
who are we looking at?
I mean, there's a
Sorry,
lot
Grok,
of
Grok. Yes,
Yeah.
yeah, screw ChatGPT. I don't like all.
there's a lot of homework involved, right? You have to know what you're doing. I mean, Aave and Compound are the ones that have been around the longest. They have, hundreds of millions of dollars, billions of dollars in loans, and a good track record of very little, bad debt being accumulated. But there are hundreds, literally hundreds of places that you can get, you know, loans and different things like this. Now, there are specific ones to real estate that are popping up that solve for some of these issues. One is called Milo, and there's a variety of those, and I think there's going to be a lot more coming.
Okay, Bitcoin's going to be $1 million in 5 years. Of course, I'll take this at an $88,000 valuation. And I'm okay taking that loan and knowing that, hey, it could go down to 50, but long term, I'm okay holding it.
Well,
So it just becomes
if you
under
have a
risk.
loan on the property though, you're still gonna have to pay off that loan
It
by
depends on
selling some of that crypto or
if
leverage that crypto to
as the
pay it.
seller, if you own it cash, if you've got enough
Yeah.
spread, I'm curious how this applies to potential more complex wrap mortgages, assumptions.
Yeah.
I mean, there's all kinds of complexity within the real estate world too that we talk about. So
Yes.
there's definitely deeper conversations we can have. But the simplest is that person happens to be in crypto. They're going to convert to US dollars and it de-risks it for grandma who doesn't even care about understanding this world. And that's got to be okay.
So all right, so I'm the crypto king. I'm buying Matt's $3.13 million house, and I offer in crypto. They say no, I want it fiat currency. So now I got to change to fiat currency, right, to the U.S. dollar. What is that going to cost me in fees, and what is that costing me? Do I got to pay 30% in income tax, or how does that actually work?
Yeah, so let's like do a little talk about from the perspective of each different party. So if you want to buy a house in crypto, you have a few options. You can effectively sell that crypto. You're going to pay some fees associated with the actual sale, and then if
Well, how
you
much is that typically?
If you use a major platform, it's going to be 1%, maybe a little bit more, and it depends on the crypto. And so you're going to pay that, and then you're going to incur some sort of capital gains on the appreciation that you've had since you've owned that asset. So it's like selling a stock,
Okay, so
right?
it's like selling
Yeah.
stock.
So I have, let's say I have Nvidia stock. I now want to. Matt says, "Hey, I got a great home." I say, "Yeah, I'm way up on Nvidia stock. I want to sell the stock and I want to buy the home." Well, I'm going to have to sell the stock, and there's some fees associated with that, and then I'm going to have to recognize my gains, right? Because I've sold one asset and liquidated it, and so that's just business as usual, right? That's like any asset that you would sell for another. That's going to happen. If you want to work with people that want to pay in crypto, you could say, hey, just like taking American Express, I'm going to use one of these payment platforms that allows you to pay with crypto. They're going to charge you a fee associated with doing that. It really doesn't matter to me. I'm going to end up getting cash on my end, right? So it's no different than a restaurant saying, or even a real estate agent saying, sure, you can pay with a credit card, whatever. And the fees and all that, it's going to depend on the platform who pays that. But at the end of the day, you're not going to actually be receiving crypto. You could also choose to receive the crypto, and you could choose to sell it yourself, but why would you? Maybe if you think the fees are going to be less than the fees associated with
Yeah, because then
using an
you are quite,
intermediary.
yeah, because then
Right.
if you take the money and then you sell or if you take the crypto and then you sell it, then you're incurring the
Right.
property, the
And you're
income
also
tax.
taking price risk, right? So there's a time between when you take it and when you actually go sell it that the price could move. And crypto markets are 24/7, 365 days a year. And so maybe Bitcoin drops 3% before you have a chance to sell it. So now you lost 3%. Maybe it goes up 3%. But once again, you probably would use a payment solution to mitigate against that. Just like you would if somebody paid in euros. They said, I want to buy your house in euros, right? And you would use a payment solution that converts that to US dollars immediately on the back end. All you know is you're receiving cash, right? And so I think for real estate firms, it's a really easy way to show that you want to work with a lot of newly minted millionaires that are in cryptocurrency because it's such a promising, fast growth asset class. So you're signaling to a customer segment that may be looking for a real estate agent or firm that is crypto friendly, right? They want somebody that is familiar with it. And once again, there are lots of solutions that you can use to mitigate against these risks of like you don't actually have to be in the middle of receiving the crypto and figuring out what to do with it.
And then the other way is to borrow against it.
Yeah, so that's from the purchaser perspective. So you could say, why would I ever sell my Bitcoin? It's going to be worth if you zoom out, Bitcoin is worth more in the future than it is in the present. So why would I ever sell this asset? And also why would I pay the taxes? So you may say, I just want to do a loan. And of course, this is, the ultra wealthy do this in almost everything. If you listen to the Rich Dad Poor Dad guy talk, he's always bragging about how much debt he's in because he gets to write off the interest payments and he doesn't actually have to sell any assets in
And he
order to
has no
get.
tax consequences because it's
Right.
a loan. And I mean, this is one of my hacks that I've taught clients for 17 years, where you let the asset grow. When it's grown enough, I call it shoring the sheep instead of killing the sheep, right? You can sell it once, have the tax consequences, roll it into the next purchase. How about keep the old one? You bought it for 150,000 in 2006, and now it's worth 400,000. You take out 65, 75% loan to value. You take that cash out, it's tax free,
Yep.
and you've now increased the debt you have on the original property, but now you can take that and buy two properties, right?
Yep.
And so
Yep.
that's how my wife and I leveraged our properties kind of 16 through 19 when we bought a chunk of them, was literally shoring the sheep from original purchases that had seen a bit of a run post 2011, 12. And so it's a way to leverage. And as long as you can keep your rents on that initial property in line with something that covers, like still somebody else is still paying for the asset as a renter, but you're able to liquidate cash with no tax consequences. So yeah, it's a similar type of thing.
Yeah. I mean, crypto is just all about greater liquidity, 24/7 markets, and just enhanced access from a global perspective. And that's really the core of what crypto is. So what countries are also doing as well is they're creating blockchain registries of sales and ownership of different properties. The advantage of this is it's very transparent. It's also, you don't have to worry about fraud, because of the way, that's one of the core value props of crypto, is this elimination of fraud because it's so transparent.
That is
But
a
isn't that how drug dealers pass money to each other, as money laundering?
Yeah, that is what people thought. Actually, cash is much better for money laundering. When you pay for an illegal activity or substance with crypto, there is a permanent record forever of that transaction. Now, it can be between a bunch of numbers that represent one wallet to a bunch of numbers that represent another wallet, but there's lots of reverse engineering that could be done at some point in time. And remember, that record is forever. So all these people that, were doing transactions, illicit transactions on Silk Road, using Bitcoin back in the day, thinking this is perfect, it's actually perfect for law enforcement, because at any point they can go back and, reconstruct what happened. And, this is actually another interesting thing about crypto, is that when hacks occur or criminals steal crypto, it is increasingly getting much and much, much harder for them to get that money actually like in a bank account, because instantly that address is blacklisted. None of the exchanges will do business with a hacker's known address. And then they can't, you have to move it from, a wallet to an exchange to a bank. Well, they really don't have any off ramps. And so you're seeing that most hacks that occur in crypto now, they're kind of giving the money back in exchange for a bounty, because they know they can never actually get that money.
Oh,
Eh,
that's
That's interesting because I think you may know my friend who's the federal defense attorney. I don't know if you've met him at some of the
Yeah,
events we've had,
yeah,
but he actually is working. Well, I don't know how much I can share. I'll speak in generalities. Uh, uh, so bad people in a country south of us tend to trade in crypto,
yep,
and so they have figured out using exactly the record you're talking about because it's on the blockchain, and they're basically in working on these crypto accounts. So like to your point, this evidence is there and it actually creates a really interesting blockchain that is there forever to be able to go back and reverse engineer. Hey, these were the accounts associated with this. Now we know exactly where it is. You can't take gold and cash and bury it under the ground and only you know where it is because
yep,
it
yeah.
exists on the blockchain. To that point, actually, because there's something that's coming up right now, and I've heard it a few times, where you have a paid off house with no mortgage and no one else but the homeowner, and there's people going down to the county and actually falsifying documents saying that they're with just a warranty deed, changing the warranty deed. Oh, we're changing it to our trust. Here's the documentation. It's as simple as filing that with the county, and then that asset's getting transferred.
yep.
And so that is a concern with our arcane systems that we already have in place that are supposed to keep things secure, where you have these fraudulent people that are literally just transferring properties. Person's still living in their house. They paid off their house and think it's their asset they're in forever. And they're finding out they no longer own the asset and they're having to go down and chase it. And that money is exchanged hands. So you're talking about a blockchain that actually eliminates that and makes it more secure. And so I actually think working in real estate, that transition from the county and the warranty deed on a paid off asset and actually putting it on the blockchain may be a transition because security and security issues with title companies is off the charts. I have a friend that works in security with that just on wire
Oh
transfers,
God.
but it's also
I've seen
for
so many
actually
wire frauds. Yeah.
deeded ownership of the property you're seeing fraud on. So if that exists on the blockchain, it eliminates a lot of that security risk that can be done with a notarized signature.
Yeah, so Dubai's doing this right now. Sweden, Switzerland are putting records, real estate records, on the blockchain. There's huge advantages, not just from speed to issuance, but eliminating lots of middleman fees, which I'm sure you guys are very, very familiar with. And then, as you mentioned, it really circumvents fraud in a level that hasn't been achievable before. So, when we like assess, for example, a project to invest in crypto, most people think these projects are very ambiguous and they may have a lot of nefarious actors and they can hide a lot of things. Actually, most projects today are on chain, and I can literally look up their revenue. I can look up their user metrics. I can look up all these things any time of the day or night. I can look at from their treasury what they're paying themselves, what they're paying contractors. You get all this data. And even when I, did traditional venture capital, I would request this information, from a startup, but I would have to hope that they didn't falsify any records and that there's verifications, different things like this. So, crypto is gotten this reputation as sort of this black box. It's good to do crime in. It's great to have a company that you can scam people in and different things like this. It's actually the opposite of that. It's actually was built to avoid a lot of these things, and it's really incredible when you show people, like, what's this company made today? I can tell you that right now. How many users does it have? How many new users versus existing users are responsible for X amount of revenue for this month? I can look all this information up instantaneously.
Wow. That is exactly a perception shift that people have no idea on, and I hadn't even thought of. I haven't thought about the title uses, obviously, with blockchain just for fraud and scams and things like that. But yeah, having that history. Well, I guess, and that would have to be the users that are paying in crypto that is on the blockchain, like fiat users on a subscription that are paying. I mean,
No, this information is available. You just have to know what platforms to go to. I mean, the public blockchains are accessible at any time, any part of the day, all the way back to the beginning of that blockchain, every single transaction. And so when you think about from a real estate perspective, it's the same. You can access all the information instantaneously, and that's really, really valuable when you're trying to do due diligence or when you're trying to just double check record of ownership or different things like that.
fascinating stuff.
That's crazy. Well, are you going to buy a home in Bitcoin? Reach out to us, I guess. Hey, we want to thank Mike for taking the time. If you want to reach out to him and ask more questions about his fund, what he's doing, I'll put his information below in the description. Appreciate you for coming by. And what did you think about this conversation? I'm curious.